Yo, yo. All right, let's get this thing set up. Let's get this thing started. Yo, yo. All right, let's get this thing set up. Let's get this thing started. Yo, yo. Oh wow, we got some echoes. All right, guys. So everybody knows it was a lot of FUD in the market. So obviously everything was going down. Biggest thing, always look for levels. So this one I'm going to keep it really short, really simple. We're going to cover Tesla. We'll talk about AMC, Lucid, Bitcoin, the NAS, SPY, just all the big ones to really keep your eyes on. One kind of follows the other, or one kind of correlates with the other, or at least from the way that I see it. Everybody has their own techniques, their own strategies. So let's just see if mine kind of works. So we'll start off with Tesla. Now, Tesla got beaten down, like disgusting. But you can see here that it did still play out kind of as expected, and sort of how I mentioned in my previous video. One, it's getting hammered by the 20-day moving average. Now, these things are so important to watch, and it's always good to look at these from different charts. So on the 1 year daily chart, you can see here it broke down, couldn't break over that 20-day moving average, but it held on the 50. Now, does it mean that's it? It's done dropping? It's going to come back up? We really don't know. We're just going to have to see what happens next week. But you do see there is still this massive gap here between 910 and 944.20. Right, that's a $34 gap. All right, that's a pretty big, it's pretty significant. So I do feel that it may still pull down just a bit more, fill this gap, maybe retest the $900 level, and after that consolidate for a bit before pushing up. Do I see it coming all the way down to the 200-day? Absolutely not. Like there's no possible way. So you'll also see here that I have this trend line. Now on the daily chart, it looks like it's way below the trend line. It also did get rejected over here, got rejected over here, got rejected here, rejected here. So there's a lot of times where it was rejected. It did break above, but it never really held. There was no confirmation that it's holding above. Now if we switch it over to a different chart, let's just say the 4-hour chart, you'll see here it's still above. However, on the 20-day, you can see that, well, even though it was still above, a lot of the times it was actually trading above this trend line. So different charts are going to give you a different perspective whenever you're looking at anything. But I always like to look at every chart, so it'll give me a better idea of where something is going. Even though over here on the 20-day chart, I already mentioned that it is going to fill this gap. It did fill the gap. Now, it started trading within this range on the 20-day 1-hour chart, but it was never holding above it. And then it did open up the next morning, it gapped up, but there was a gap right below this line. That is how I figured it is going to retreat. Now, first confirmation, of course, is going to be the 20-day moving average. It was never able to hold above on the hourly chart. Then once the market opened, we can zoom in here a bit. It did try to push up, couldn't hold, fell. It tanked. This is perfect confirmation. Even though a lot of people say that, you know what, it's going to crash this hard, it's going to bounce. That's never the case. It's not that it's never the case, but you always want to wait for confirmation, all right? And if you're looking at a 1-minute chart, things are going to look completely different. If you're going to use a 1-minute chart, use it strictly for scalping. If you want to use it for something like a long-term hold, you can't use a minute chart for that. You have to look further out. You have to look at either 20-day 1 hour, 6-month 4 hour, 1 year in a day. The further out you look, the more bigger picture you're going to get for how it's actually going to play out. All right, so now here you still have this this gap down below. You have this level of support right here at about $1,000, which in the previous video I did mention that it could pull down to $1,000. On the 1 year chart, it's going to look different. So on the 1 hour 20-day chart, you have all 3 moving averages in my favorite pattern to predict an uptrend. Right, you got the 20 below the 50, below the 200. Now this is perfect. And because it is bouncing off of a major support level like $1,000, it's a very solid, bold, psychological number. I do feel that it could push up. So if it does begin to push up on Monday, I would look for resistance at 1038.89. So let's just say 1040. If it does break above that, then of course you have the 50-day moving average. Now, probably by Monday, this is going to be a little further down. So what I would say is probably right there. So 1035. All right, let's just say 1034, 1035 is where I'm going to see the first level of resistance. Now, if it breaks and holds above this 20-day moving average, then yes, it is possible that it can come back up here to about 1050, 1060, and by that time the 50-day moving average will be a little further down. So that is where you're going to look for your next level of resistance. Now, zooming out a bit more, let's just say the 4-hour chart, you've got the 200-day moving average right above here at 1027. So this would be the first level I would look for in terms of resistance or support. Tesla is extremely volatile. There's so many people that buy this. I would not be shocked if it just opens up pre-market above this. If it does, then I'd still say that it's going to run up maybe 1050, 1060, or 1040, and then it's just going to come back down to fill the gap. Because you do still have that massive gap down below, and since it's right there, the safest, or at least the smartest thing for investors to do is to just let that get filled. Let it come down, retest 900, which was a previous level of resistance for us, right? This was a massive level of resistance in the past, but I mean, once we finally broke through it, I don't know why I was going out that far. It's like right here, but like once we finally broke through that, it never retested it for support. So it did try to come back down a couple times, didn't really do it. You also have this massive M, like it looks like a double top reversal pretty much. So I still want this to get filled, maybe come back up, retest, bounce off of this, pull back down, and you can still make money on the way down, guys. So Tesla is a very liquid stock. You can long it, you can short it. If you're going to do options with it, you can take some call options a little further out just to play it safe. And during that time, you could still use put options to ride it on the down. So here, if we go into trade, you have different weeks, different expirations. So you have December 10th, you have December 17th, 23rd. You have all these different weeks for expirations. Now, if we open up the 10th, which is going to be expiring at the end of this coming week, you can see I've got a long position on my calls. I've got the 1085 calls. I've also got the 1010 for my puts. Now, what does this mean? This means that basically as long as it's going down, I can still make money. I can profit off of it coming down to the $1,000 level, which it's pretty much almost at, right? So here I'm doing pretty good with my puts. And then what I can do is I can close out this position once I see that it has confirmed the level of support. I'm not just going to sell it because it finally comes down to 1010 or $1,000. I'm going to wait to see, is 1,000 really going to hold as a level of support? If it opens up on Monday and it's going to be at 1025 or 1030, I'm not going to close out at a loss on my put options. What I'm going to do is just wait to see if it's actually holding 1025 or 1040 as a level of newfound support. If it is, then I can close that out. I'll take a loss on that, but I'm going to be making on my calls. So my puts, I can close. My calls, I'll still run. But realistically speaking, I would probably just add in at a better cost if it does actually open up much higher on Monday. And then I can write it back down because I do still have more of a conviction that it is going to come down below $1,000 on Monday. All right, there's still going to be a lot of VIX, and we're going to talk about the VIX after this. All right, so going back to the chart, if we zoom back out to the 1-year daily, that's what I'm going to be looking for. I want to see if it is going to come down below the 50-day moving average, come fill this gap. If it does, it'll probably pull back down to about 900, maybe consolidate a little bit. Then I want to see if it's actually going to pop back up into this range. So is it going to get back up over 910 and hold 910 as support? Or even if this is going to come drop down and bounce off of 944. We have to see all these different levels before we make any kind of decisions. Always wait for confirmation, guys. Like I just can't be more clear about waiting for confirmation. I know people say that, oh, it's going to hit this, that's it, you get in there. No, you can never really predict where the exact bottom is going to be, but the best thing you can do is dollar cost average. All right, so that's what I'm thinking for Tesla. I do still think it's going to pull back and then just make a massive run back to the upside, but that's going to be over some time. I still want to see how this double top kind of plays out. It usually pulls back about 50%, so maybe around this level for 900, and then ride it back to the upside over time. All right, so now let's talk about, you know what, I should have started off with the VIX, but either way, let's get into the VIX. Now the VIX, if you saw in my previous video as well, I was talking about these two gaps. All right, so now it did kind of trick everybody in the morning on Friday, but because it pulled back a bit, so everybody thought that it was going to come down and fill this gap first, which would have been, well, you know what, it could have gone either way. I kind of preferred that it would go up to fill this first gap because we want all the fear to kind of get out of the market. And if there is a gap up here, it's just better. It did fill. Now, when it actually filled later on in the day, it did come back down. But what was kind of iffy about it is once this gap filled, it came down. It was still holding above the 200-day moving average, and it pushed up really high, and it did a triple top reversal. I didn't exactly catch it up here, and you can't just trade the VIX like with common shares. You can only trade the VIX with options. Now, when it did come back down, it broke below this level, popped back up, broke below again. So it was a little tricky, but I do still feel that now there is a little less fear in the market after the last 2 weeks. So what's going to happen is I feel the VIX is going to pull back. It's going to come down, maybe bounce off of the 50-day moving average on Monday. So it'll come back between like the $25 to $28 level. And eventually it will come back down to close this gap. Now, it may not happen right away. I'd say probably by the end of this week, we are going to be trading between the $30 and the $20 level, or the $21 level. And then after that, of course, it'll just come back and close this gap. Now, how to trade this? It's the same thing. If you're going to be using options, I took mine a little further out because there's a lot of emotional trading when it comes to stocks, especially when it's the end of the year. There's so much expectations. There's so many people that are just looking to, you know what, let's just close out positions. And then when it comes to institutional investors, big-time fund managers, or just funds in general, they usually don't like to close out their trades by the end of the year. They want to hold it until the next year so they can kind of scale back on taxes. So I took mine to December 22nd. It is a put option, so I do feel that it is going to be running down to the $25 level. Okay, so right now it is at 30.67. That's where it closed. So I do feel that even if it does come down to 25, I'm safe. But I'm not planning on closing it out. I'm just going to run it down until probably the week of the expiration, and then just wait to see how it is down there. I may add to it. I may not. I'm just going to play the VIX as much as I can. Once it gets to the 25, or at least gets to the 200-day moving average, that's probably where I'll start taking some profits, or maybe even just close out my position on that. Let's see how the SPY was doing. The SPY is doing exactly what the rest of the market is doing. So it does constantly run. You know, SPY always runs, it pulls back, it runs, it pulls back. It's not in correction territory yet. You got to remember that when the SPY, when the NAS, when anything pulls back, it needs to do a pullback of 10%. So even though 473 to 450, oh wow, that's a big drop. It is a big drop, especially depending on how much you have invested in it. If you have a large position in something and if it drops $1, that could still be a massive loss. So $75 or even $25 is still a big move, but it's still not 10%, right? So the only time you're going to actually say that it is in correction territory is when it's probably down to about, well, it would need to pull back about 47. Yeah, let's see if it's down here. Yeah. So about there. So once it finally reaches this red line that I have here, which is set for 426.16. All right, so this would be correction territory. So maybe I should change this to a different color just to make it a little easier. We'll do white, and I'll make it thicker. Yeah, we'll do about a 5. Ooh, all right, that's ugly. But it doesn't matter. At least it's visible. We all know that this is going to be the level for a correction. Okay, that means it's finally gone into a bear market. All right, let's look at now. NU it's not even listed yet. It's supposed to be IPOing on Monday, so I am gonna have my eyes on that. But let's take a look at Lucid. Lucid did exactly what we all thought it would do. It did come back up. It filled this gap. Once it filled the gap, it just couldn't hold above it. It tried once, it tried twice, it tried 3 times, and that's it, right? It started giving back up. Now, of course, you have all the FUD in the market, you know, fear, uncertainty, doubt, and that's what's basically pushing the market down. Now, it did come back to this green level, which I had here, which is just the bottom of the gap. This is important because I wanted to see if it's going to hold this level as support, and it did, right? It came down, it just barely grazed it, and then it started pushing back up, and now it's holding. Well, it's not actually holding, it's actually holding below the 20-day moving average. So come Monday, what I'm looking for is to see if it's going to open above this. It's going to come back down and retest this, like actually retest it, 44.22. Because you see here, it did come down, it tried to go above, it didn't. There was no solid confirmation here that this level is holding as support. And the reason why I have this is just because it's the bottom of this gap. Now, this is actually 43.94. So maybe I should change this. Let's edit this, make it 43.94. 43.94. Okay, yeah, so you see it does still have a little ways to go before it comes down to retest this. So this is the level I'm watching for Lucid going forward. I want to see if it's going to hold this. If not, then yeah, we could see a pull back down to the 50-day moving average, which would also line up with this candle right here. Okay, so 39.33. I'd still say by the time this opens up on Monday, this 50-day moving average will be probably at the $40 level. So yeah, that's what I'd look for Lucid going into Monday. All right, let's look at BITO. Now, if anybody's following crypto or holding Bitcoin or holding anything in crypto, you're probably shitting bricks right now, but it's okay. It is going to pull back, or it is going to run back up. Okay, now this gap, obviously I wanted to see this gap get filled. It did, thanks to the FUD. Now you can definitely run this back up, either by using common shares or by getting into some options with BITO. Now remember, BITO is the ETF that follows Bitcoin, right? So whatever Bitcoin is doing is taking effect on this chart. Now you can also use GBTC, which is the grayscale Bitcoin. Yeah, let's see. Yeah, and it's doing the same thing. Got a massive double top here, so it's just coming back down. So I'd say Monday, look for a retest of the 200-day moving average if you're trading GBTC. I mean, this thing has gap city, right? So you've got gap here, gap here. Of course, this ended up getting filled. There's still a gap down here, so it could still pull back further. You just never really know, especially when it comes to crypto or Bitcoin, because there's so many regulations. There's so many things that they keep trying to enforce on it. I really just think it's all government hype because they see how much it runs, how much backing it has, how much interest it has, and they just want it to pull back so they can, you know, the big guys can just take a bigger piece of it and then run it back to the upside. But either way, I don't really follow GBTC too much. I follow BITO. I have my alerts set up. So for me, I'm not really going, I could kind of scale in, you know, maybe buy a little bit once it comes down on Monday, if it does come down a bit more. I'd like to see what happens at the bottom of this gap. So at 34.76, I want to see if it's actually going to hold it as support or if it's going to get rejected by it. I'm going to wait until it actually gets above that level. So once it's finally trading in this range between 36 and 34.76, then I can start scaling back in. Plus, you also see my favorite pattern is in play over here with the 20 below the 50 below the 200. Okay, so that just gives me more of an interest or more ammo as to seeing this thing coming back to the upside. All right, now for everybody's favorite AMC, you can see that this thing fell below this this pennant. I mean, it was trading pretty well before, but it just crashed with the rest of the market. Perfect for me. I love it because it came down and it finally filled this gap. I mean, this gap has been here since May. Okay, 28th of May 2021. I've been waiting for this gap. Even both of these times when it came down here, I thought it was going to come down and fill it. It didn't. Came down here, it didn't. But it did hold this line, all right? And this line has held up so many times. It did break below here, but either way, finally this thing is done, it's filled. Now when it comes to fundamentals, when it comes to looking at balance sheets, AMC is not really a stock that you can look at for a very smart money kind of trade, right? You're trading this because of volume. You're trading it to see, okay, you know what, it's overbought or it's oversold. You want the little guys to take over the big guys. That's pretty much why anybody and everyone trades AMC. Okay, so that's pretty much, even with that, it still respects levels. And it's been trading pretty well for me, at least for the long run. What I would do is options on this one. Now with AMC, I would do something a little further out. I've already closed out my positions because it was a Friday, and like I said, AMC is extremely volatile. The gap was filled, so I do want to see what's going to happen on Monday. If it does open up, let's zoom in a bit on the 20-day 1-hour chart. All right, if it does open up above the 20-day moving average, that's great. However, let's extend this, and I want to see if we do, say, the 7th. Okay, so I want to see a retest of the top of this gap. All right, I don't like when it just explodes up and it doesn't actually come back and retest it. I want to see retests. Everything I trade, I have to see a retest. I need confirmation. Okay, so I want to see it come back down to 27.33. Once it holds that level and then it shoots back up, that is when I can start scaling in. So bounce off of that, I'll buy my first batch and then see what happens at the 20-day moving average. If it finally goes above this, perfect. And again, you got my favorite pattern with the 20, 50, and the 200. So this is very good. I would definitely hold call options, maybe something with an expiration date into January or February would probably be something I'd definitely have more interest in. Because like I said, AMC is very volatile. It runs, it dips, but in the long run, it's usually the apes that beat up the men in the suits. So that's what I'd be looking for when it comes to AMC. Okay, so on Monday, keep your eyes on the VIX. This usually does trick you first thing in the morning, so don't get too excited and just start loading up on stuff. Wait until you see what's happening with the VIX. Is it going to stay above this gap line right here where it finally did come back and fill? Is it going to hold it as support, or is it going to fall underneath and get rejected by it? So we have a newfound level of resistance. At that point, you can start going long on your other positions. And if you can do options trading, then you could definitely short the VIX. I mean, it's not a bad idea. I definitely would. I'm doing it already, so you could do that. Now, a lot of times when you're hearing about people doing put options, you're going to hear other guys that are telling you you get paid a premium. So I actually had some people ask me about that premium. It's not that you're getting paid a premium to take something. No, to trade something or short something. It's like, hey, you know what? I'm going to take 10 put options on this. I'm going to get paid a premium on it. You're not going to see your account size grow. All you're basically doing is you're making money on something with the option to buy into it later. So if you get something, say, at the $30 strike price, okay, your strike price is $30. That's because you think it's going to come down to the $30 level. Now, if you have one lot, okay, so remember, if you want to buy this, let's just say you're going to buy a put option for $30. The ask right now is $5.60. Now remember, when you're buying it, you have this right here. Your quantity, just because it's 10, it doesn't mean you're only buying 10 shares, right? Everything goes in lots. So this is 10 lots, and every lot consists of 100 shares. Now that 100 share count is at this value. So even though you're buying something because you think it's going to go down to $30, you're paying $5.60 per share of that $100 lot. Okay, that lot, which consists of 100 shares. So really, you need to have $560 available for you to make a purchase of one lot. Now, if you're buying 10 of them, you're going to need $5,600 available for you to make that purchase. Now, what happens is once it starts pulling back, okay, once the VIX drops down to 30 bucks or drops down to 29 bucks, then you're going to see this black is going to start becoming purple, because this is called in the money. All right, right now this is in the money. It's in this range, right? Because it's above the $30 mark. Once it finally drops down to 30, this 30 is going to come down into the blue box, right? Because it's now considered in the money. So every time it goes lower, you start making money. So now this 560 will become 760. Then it'll become 960 the further that it drops, right? Because you're just getting more and more into the money. Now at this point, you can close out your position in two ways. Either one, you can close your position completely where you don't take the shares. You're just saying, hey, you know what, forget it. I want to just sell this, get rid of it. I'm gone. I made my money. Or you can say, you know what, I want to hold it. With the VIX, you can't actually do it. That's a pretty bad example. But you can basically say, I want to exercise my option and I want to keep the shares because I feel that later on it's going to go back up. All right, so you could do that with Tesla. You could do that with AMC. You could do that with Lucid. You could do that with anything. But you can't do it with the VIX. The VIX, you could strictly only trade the option. Okay, so in this case, I would simply just close out my position once it finally reaches $25 because I already have the puts set up for the $25 mark, and then I'm good to go. It doesn't even have to get down to $25. It can come down to 27 or 26, and I can still close out the position and make money on that. But that is basically the premium that a lot of people hear about. So there was a couple people that were asking me, that is what a premium is. You're not actually getting a payment for like, hey, take this money, you can short it. It doesn't work like that. It's just you're getting paid as long as it's working in your favor, which is going against the market. All right, shorting it. It's just a better way to short it. You're using less capital, less money up front to still trade something of the same size. That's why even with Tesla, instead of actually buying Tesla, because think about it, if you want to buy 100 shares of Tesla, you're going to need $100,000 to actually buy 100 shares of Tesla. Or you could do an options trade, and you can take, well, depending on where you think it's going to go. If you want to ride Tesla up, then you could say, I want to buy the strike price of $1,010, which means you think it's going to go to $1,010, which Tesla is at $1,008, so that's really not too far away. It's not far-fetched. You could definitely do that, right? But instead of buying $1,010 worth of one share, which is going to cost you $1,000, you could do an options play on it. So if you were going to do this, it would cost you $46.95. Now, if you do that by one lot, that really means you're paying $4,695 for one lot, which gives you 100 shares at $46.95 with the option to exercise if you do want to buy it at $1,010. So if Tesla goes back up to $1,050, you have two options. You can either just close out your options, which means you just sell it and you make your profits and that's it, you're good to go. Or you can say, you know what, I want to buy it. They're going to charge you $1,010 per share, even though its current value is now at $1,050, right? So you're basically saving $40 in that purchase. But you just got to keep in mind that you're going to need to have enough funds to do that, to exercise that option. If you don't have the funds for that, it's okay. You just made a ton of money by riding an options play up to the $1,050 level. You just made $40 on 100 shares, essentially, is what you're doing. All right, so that's basically how you do it when it comes to options. But those are the stocks that I'm going to be watching. Like I said, I do feel that it is going to come down here. I want to see if it does, if it's going to retest the top of this gap, if it's going to break below the gap. I need to wait for that support and see what it's going to do. Always wait for confirmation, guys. Wait to find levels of support, wait to find levels of resistance, and trade based on that. Don't try to scalp things unless that's only what you're going for. If you're looking to just do a quick trade, a couple minutes, scalp something, be out, then that's good. Otherwise, wait for confirmation. All right, hopefully you guys found this useful. Hopefully you guys stay green, and I'll see you in the next one.